We will now deal with the third subdivision here. Question number 1. From this balance sheet, on 1/4/24, A sold 800 worth of stocks to B for rupees 1000. So A and B. A sells goods to B. Cost being 800, by adding profit 200. Goods sold on 1/4/24. 1/4/24. On the same date, A drew 3-month bill for rupees 1000 on B and acceptance received from him. So A drew bill, 3 months bill. B are drawn. And B reads and accepts this and sends it back. Then it is called BR acceptance sent. Bill's acceptance sent. A endorsed in favor of C for the due and met by B on the due date. Now A has to make the payment to C, right? The amount payable to C as per the balance sheet being 1010. A says, I will settle this due with my bill. The bill value being 1000, but C accepts for all the due to be settled. So due settled being 1010. What does it mean? 1010 should be payable to the C, to the creditor C, but the actual payment is only 1000 rupees worth bill by way of bill. So the difference between these two may be discount received in the hands of A and discount allowed in the hands of C. This happens on the same date, we'll assume, probably on 1/4/24 itself. C keeps it till maturity. On maturity, C sends the bill to B and gets the cash. Bill sent and cash received. That's how the settlement is done. This day being, as the bill is for 3 months, you have to add 3 months and 3 grace days. The actual settlement by B will be on the maturity date, so which is 4/7/24. 4/7/24. On 4/7/24, the payment is made. On 4/7/24, the payment is made. Is that clear? Now I am going to pass the journal entry for the first one, sales. Second one is all about for drawing and getting the acceptance of the bill. Third one being endorsing this bill on behalf in favor of C, and fourth one being encashment of the bill on the maturity date. So these are the 4 journal entries we are going to pass. Okay. In the books of A as well as in the books of B. In the books of A as well as in the books of B. Clear? Let's see. In the books of A, first one. The first one happens on this date, 1/4/24. 1/4/24. Come on, tell me. What's the journal entry? Come on, you can write with me along. Okay, don't waste your time. All the journal entries are pretty simple. The first one is all about sales for A. The entry being A account debit to sales. A account debit to sales. The value being 1000. The value being 1000. Next, second entry. On the same date, bills sent and got acceptance. So the entry being BR account debit. BR account debit to A account. Value being 1000. Sorry, B account. Okay. These two are B account only. Yeah. 1000. On the same date, the bill got endorsed. Third entry. The bill got endorsed. Endorsed is nothing but the bill is handed over to C for the due to be payable. The amount of due payable to C being 1010. So the settlement is done by way of settling by offering the BR to him. So C account debit. C account debit. The value of C being 1010. The payment made being to BR only 1000 rupees. The original due is 1010, but we offered only 1000 rupees worth of BR. So difference between these two is my gain named as discount received. Discount received. On maturity date 4/7/24, Of course, it is promptly paid, so we no need to pass any entry in the books of A. No entry in the books of A. What happens for the parallel entry in the books of B? What happens to the parallel entry in the books of B? Okay, 1424, 1424. Okay, instead of sales, the entry should be in a reverse form. What's that? Purchases account debit to A account. The value being 1000. For the due, now B accepts for bill. The entry being A account debit to bills payable. For him, it's bills payable. So A account debit to bills payable. The value being 1000. The value being 1000. Clear? For endorsing the bill, no entry in the books of B because it's a transaction between A and C. B says for it may be. If he brings the bill on maturity, I will honor this. Whether you keep it yourself and bringing to me or giving it to C and bringing the bill by C, doesn't matter. I will just settle on the maturity. So no entry for endorsing in the books of B. On maturity 4724, for this bills payable, B has to make the payment. So bills payable account debit to bank. That's all. To bank. Honoring the bill. Honoring the bill. Is that clear? Now I'll just explain what could be the impact. What could be the impact in the balance sheet? Okay, in the books of A. After each and every transaction, on 1st April 24, sales is made. For that, what happens? We get new value here for B, 1000 rupees recoverable from B. 800 rupees worth of stock has gone, so 2000 becomes 1200. Because of this, we made a profit of rupees 200. It will be included with the reserves account. Rather than 2990, now we have the reserves of 3190. This will be the change happens immediately after the first transaction. Immediately after the first transaction. Of course, you no need to worry about that. How these transaction will have the impact in the balance sheet. Not required for the examination. Usually for the examination, you have to pass the journal entry. Sometimes you are asked to post that into the ledger. But anyhow, I just to show how this will have some impact in the balance sheet to understand the logics behind these terms here. What happens in case of endorsing, discounting, or if it is kept by the owner he himself, writer he himself. So those clarity will be possible by understanding this way. Let's see. There is no change in fixed asset. That remains 7000. BR we don't have and cash 1000. No change in capital 1000, 6000 and creditors remains 1010. This seems to be an accounting equation approach. Like, okay, in practical life today, each and every transaction after how will be the impact in the accounting equation that we directly record in accounting equation approach. Instead of accounting equation approach, I just use the balance sheet approach. That's all. It's for the learning purpose only, not for the examination purpose. For the examination purpose, you have to pass the journal entry, or sometimes we may be asked to prepare the ledger also. Right. Now the total being, come on, tell me what is the total here? 10,200. I hope the total being 10,200. Always cross verify by calculating these values. Come on, make it faster. Now what happens with the second transaction, sir? In the case of second transaction, B becomes 0 and automatically what happens? New entry will be included for the BR. Balance sheet remains same. This one has gone. Instead of that, we'll get BR. This is what about the second transaction. So balance sheet after the second transaction being this one. No change in the liability side, but in the asset side, we have making the B account 0 and making the BR being 1000 rupees. What happens in the case of third transaction, sir? Due to the third transaction, C is debited. Already we have 1010 for C's credit side. Now by debiting, it becomes 1000. So it becomes 0. And BR account will be now cancelled completely. What about the discount received? Discount received is a part of your gain will be added to the reserve account. Now the reserve being 3,200. Is that clear? As you are making the payment to the creditors with a discount, that discount portion is your gain will be added to the P&L account or reserves and surplus account. Is that clear? Leaving these things, other items remain at the same book value. So 7,000 fixed asset remains unaffected, and stock in trade also 1,200 remains unaffected. Now we don't have the debtors, we don't have the BR. And what about the cash? Also remains unaffected. Also remains unaffected. Similarly, in the liability side, capital 6,000 remains unaffected and creditors already cancelled. Now, what's the total? 9,200 will be the total here. 9,200 is the total. Clear? Now, what happens after the last transaction, sir? After the last transaction also, there is no change. It remains the same. 7,000, 1,200, dash, 1,000 and 9,200. Okay. Here also you will have the same value. Okay. 9,200. Is that clear? So this is after the first and second transaction. This is after third transaction. This is after the fourth transaction. But you see that the balance sheet between these two remains same, like, but it's not same. It's not same. Clear? I want to make you understand the difference between the balance sheet number 3 as well as balance sheet number 4. Balance sheet number 3 is nothing but the balance sheet prepared after passing the three means after incorporating 3 transaction journal entries in the balance sheet. Fourth one being the after incorporating the fourth journal entries information in our balance sheet. But of course, we don't have the fourth journal entry in the books of A, because honoring has no any impact in the books of A. But how will you say that the third balance sheet and fourth balance sheets are same? Okay, seems to be same, but how? Is it same or is there any difference? If I ask that question, of course, there is a difference. In the third balance sheet, you have one more liability called contingent liability. What does it mean? As on this date, 1/4/24, as you are endorsing the bill to whom? To C. C's due is closed and B are also closed naturally. But we have a hidden liability. What is the hidden liability? On maturity date, C approaches B for settlement. If B denies, I cannot make the payment, sir. I don't have the cash. You come back later. C will not consider that part at all. So you will get tensed. Automatically approaches C. A. Sir, you have given the bill which is encashable from B, you told me, but B failed to pay. So now it's your responsibility to settle me. I don't know who is B. I know only A. Because you have given me, I approached him. He says I will not pay. So immediately I will get back to you only. So the primary responsibility to pay or honor the bill being in the hands of B. If B fails, secondary responsibility will be on A. So from this, you have to note one point. What's that? Okay. This 3 and 4 are not same, because up to this period from 1/4/27 to this date until it is honored by B, A has a hidden liability. If B fails, he is having the moral responsibility to honor this. Do you have such a moral responsibility in the balance sheet? Of course, you don't have that. So you have to show this as a contingent liability below the balance sheet. So here, contingent liability is there for endorsing the bill. Okay, for endorsing the bill with C, rupees 1,000 and 1,010. Clear? This particular contingent liability will disappear after the fourth one. So during the period 3 to 4, after the third transaction, before we pass the fourth transaction, during that period, you have to write a small note in the below the balance sheet stating that this is a contingent liability for bills discounted. because it's a moral responsibility. If B fails, I have to pay. You have to show if there is any hidden liabilities. Of course, there's a hidden liability. It is not available in the balance sheet, but there may be chance if B fails, then we are liable. So you have to show a small information regarding that as contingent liability. This contingent liability arises in two scenarios. One is while discounting the bill, another one is while endorsing. Now we have seen the contingent liability in case of endorsing. Is that clear? So rest will be the same. To make you understand when the contingent liability arises, I have shown this balance sheet, rough calculation of balance sheet, of course not required. So you can keep the contingent liability in your mind. How? How? In case of any future liability may come, maybe cancelled also, we are not sure, but if it comes in the later period, you have to be prepared for that. You have to get ready for that. So make a small provision for that. That is called contingent liability. Usually will not be shown in the balance sheet, it will be shown below the balance sheet. Is that clear? Come on, make a note of it. So this is not required. If you have completed this one, we'll move on to the next one. Come on, text me. So we have completed keep till maturity and honoring on maturity is over. Discounting of bill and honoring on maturity is also over. Endorsement of bill and got honored on maturity also over. So we have completed all the three. We have completed all the three. Now we'll be moving on to the dishonoring situations. Dishonoring situations. Yeah. Let's see. Let's start with this one. Fourth one. Yeah. You can join with me to solve. Don't wait until I finish. In the books of A, in the books of B. 1424 A sold 800 rupees worth stock for 1000 in credit. On the same date, bill is drawn. So up to this remains same. A, B. A sells the goods worth 800 and by adding profit 200 transferred to B on 1424. A sends the bill drawn and sent, and acceptance received. Okay, bill drawn and acceptance received. Okay, A keeps it till maturity and on the due date, the bill was sent to bank by A for collection. Okay, so rather than he himself approaches B for the collection, he deposits in the banker and banker goes and collects his money on behalf of him. Okay, it's not discounting, it's only sending the bank for collection. Which date? On maturity date. Maturity date being the bill has 3 months validity. Okay, 3 months validity. Yeah. So 3 months validity. By default, you have to add 3 days for grace purpose. 4/7/24. So A sends the bill and B banker collects on behalf of E. It is not discounting. Okay, like you deposit your check into the bank for collection, you are depositing the bill for collection. Bank takes the responsibility to collect the money from B. Yeah, of course, for that he will have slight charges also. Right? No issues here. Now we can pass journal entry here one after one. So first journal entry is all about for this one. Second journal entry is for the bill. Third journal entry is all about collection, sending the bill for collection. Fourth journal entry is also about collection. Now, the first one on 1424. What is journal entry? It's a sales, right? So B account debit to sales. This value being 1000. On the same date, second entry being bill drawn and acceptance. bill drawn and bill acceptances. So he gets a BR for the due from B. So the entry being BR account debit to B account. Third will be on the maturity date 4/7/24. Third one, he hands over the bill to the banker. Okay, then the entry being bill for collection. Bill for collection, a temporary account you can create. Bill for collection to bank. You can create a temporary account. So you give the bill to the banker. You forgot, or you send some assistant to deposit that to the banker. Sometimes later you may forget. You thought it may be credited. 1 year, 2 years later, you will see what happens to the bill not collected. Only then we realize that, that the assistant to whom we have given the bill forgotten to deposit in the bank. Problem is there, no. So because of that reason, whenever the bill goes out, you will have a track record. Bill for collection, a temporary account. If there is a bill in your drawer, when you open the drawer, you will see the bill. You keep reminding yourself that you have to encash this. If you are giving this to the assistant, you think the work will be getting over, but no, if he forgets, then you will also forget because nothing is there in the drawer. So the moment you are giving this to your assistant or depositing with the banker, make an entry bill for collection to bank account. If you do this, passing this entry, what happens on year closure? You will have bill for collection entry untallied. If there is a bill for collection account appears untallied, immediately you have the doubt what happens to the bill. You can question and get the cash collected. That's why we have this temporary account, bill for collection to bank. So anyhow, this is a temporary account only, no? The next day the banker collects the money for this. Then the entry being bill collection to BR. Okay, sorry, this is BR. BR is handed over. The BR you have in debit side becomes neutralized. And now bill for collection is there. So the bill for collection is converted into amount deposited in the bank. Fourth entry, bank account debit to bill collection. Bill sent for collection. Bill sent for collection. This entry being 1000. This entry being 1000. Is that clear? Hope now you are able to see the screen. Yeah. So, first entry being sales, second entry being BR. Third, temporary account created for sending the bill to banker for collection. So now the responsibility of collecting the bill is in the hands of banker. Okay, to know whether the amount is collected by the banker or not, you need to have a temporary account called bill sent for collection to BR account. By closing the books of accounts, what about BR debit and BR credit gets cancelled, but bill sent for collection remains untallied in the debit side. That will be cancelled only we collect. Once we collect the money, the bill sent for collection debit and credit gets cancelled. That's why we are creating the temporary account called bill sent for collection account. Here, this is the logic behind. You may ask that, why do I want to do, sir? If there are n number of bills, you may have the chance to forget. In order to keep in track, you need to have temporary account bill sent for collection. So the moment you are depositing, the banker say, I will collect tomorrow. That may be out of your memory. So you are losing the money. Don't you want to? So you should not lose the money. So you have to maintain the record properly. By passing, if you are combining these two entries, the ultimate entry is bank to BR only. So you can forget to write this, or you don't write the bill for sent for collection entry at all. But by showing this, you are documenting everything. You are documenting everything. Is that clear? And now, in the books of B, parallel entry, sales will be having equivalent nature here as purchases. The journal entry being, come on, purchase account debit to A account, value being 1000. Second entry, instead of BR, here it's a bills payable. So B account, A account debit to bills payable account, value being 1000. What about the journal entry for bills sent for collection, sir? no entry, because he never bothers about whoever it may be, come with the bill, get the cash. The moment banker comes and he takes the bill and hands over the cash. So no entry in case of bill sent for collection, endorsing, discounting in the books of B. While honoring, the entry being settlement only. So bills payable upon debit to bank. So finally, you always verify. What is that? Ultimate entry should be only purchase entry. Ultimate entry should be only purchase entry. Is that clear? Check here. A credit debit got eliminated. BP credit and debit got eliminated. So purchases to bank is the ultimate entry. If you are summing up of all the journal entry, combining all this entry, you will get only purchases. Similarly, if you are combining all the journal entries in the books of A, you will get only sales entry. See, B account debit, B account credit got eliminated, BR debit, BR credit got eliminated, bill sent for collection debit and credit got eliminated. So ultimate being bank to sales. So in the books of A, it's only sales entry. In the books of B, it's only purchase entry. Temporarily, we have the BR and BP as well as bill sent for collection and all, right? Hope now you'll be able to understand this concept. If it is clear, text me. Make it faster, make it faster. So we have completed which one? Bill sent for collection is over. Bill sent for collection is over. Now we'll move with next one, starting with the dishonor concept. Dishonor concept. Okay, keeping till maturity, keeping it till maturity and dishonoring on maturity. Endorsed bill got dishonor on maturity and discounted bill got dishonor on maturity. So these are the three variants we are going to study. 5, 6, 7. Okay, let's start with. Yeah. You know that the first aspect is being the same, A, B. This diagram not required. These diagrams not required. Okay. It's for your understanding only. Don't write this in your exams. Okay. If you want, then you can show no issues. 800 rupees worth of goods by adding 200 profit, goods sold. And what happens here? Bill drawn and got acceptances. Now what happens? A keeps till its maturity, but on maturity date it got dishonored, and A paid a noting charge rupees 50. A paid a noting charge rupees 50. So on maturity date, A approaches bank B, showing the bill to get cash, but B could not make the payment. As B failed to pay this money, now he has to ensure, right, that this bill got dishonored. That for that purpose, he simply approaches the notary public and gets attestation, noting. That is called noting. He gets it noted, and after noting, he returns the bill with him. For that noting purpose, this is done by the notary public. For this purpose, A makes a payment of rupees 50. Okay, A makes a payment of rupees 50. Hereafter, A immediately makes a call to B. 1000 you have to pay as per the agreement. You failed to pay this, so you have to pay me 1000 rupees. Not only that, in order to take the legal action on you, so your bill not honored by you is also got noted from the notary public. For that, I paid 50 rupees. That 50 rupees cost is only because of the reason, so you have to pay that 50 rupees to me. So such a way the argument goes, and now he is going to record that in his book, right? Let's see. The entry may be quite a bit easy. The first one, the entry for this one. So it may be the date being 1/4/24 and maturity date being 4/7/24. On 1/4/24, on 1/4/24, okay, the entry being in the books of A as well as in the books of B. It's only sales. So B account debit to sales. This value being 1000 rupees. On the date BR is received from B, the entry being BR account debit to B account. B account, the value being 1000. The value being 1000. On maturity date 4/7/20, 4/7/24, this bill not encashed but dishonored. Dishonored means just to reverse this entry. The entry being B account debit to BR account. Okay. So I am reversing this entry, but here you have to make a note of it. How much now you have to recover from B? So B has accepted for 1000 rupees bill for the goods supply. Okay, I expected the 1000 may be recoverable in a matter of 3 months later, but 3 months later he failed to pay the 1000. So immediately I am reversing that entry, so that BR becomes credited and BR is cancelled. Again, B has to pay me 1000. Is it only 1000? No, we have to charge another 50 rupees. Because of this dishonor, I went to the court. Supposed to go for the court. I got it noted. For this, I paid 50 rupees. Now you have to pay me 1050. So now the liability for B being it is 1050. That amount is paid by me, bank account. That amount is paid by me. This comprises two journal entries. Okay, what are the two journal entries? Entry number 1, reversal of BR. As you accept for the BR, I thought you will settle this on due date, but now it is cancelled, so the entry is reversed. BR account debit to B account. On cancelling this, you just reverse this. Not only that, I confirmed this is cancelled, not recovered any, we could not recover any cash. I get it noted with the notary public. For that, I paid 50 rupees. The journal entry being notary public expense or noting charges account debit to B account. Sorry, to bank account. I paid a charges, right? But the charges is for whom? Not for me, because of your default. So I don't pay the noting charges. It's your responsibility to pay the noting charges. So I now debit B account here 50/50. So reversal as well as the penalty will also be recoverable from him. I paid to the notary public, but I am going to recover it only from you. Combined entry being B account debit to BR account debit, to BR account to bank account. The bank account is nothing but noting charges. I paid, but I recovered it from B. In the books of B, the entry being the same like first one. Rather than sales, here it is purchases. Purchase account debit to A account. The value being 1000. Here A account debit to bills payable. On maturity, he could not make the payment. As he is not able to make the payment, the second entry is just reversed. The entry being bills payable account debit to A account. Okay. Bills payable being 1000. But how much B has to pay to A? It is not 1000, it is 1050. Reversal, apart from that, another 50 rupees excess amount payable is only because of the charges. For him only, it is his cost, named as noting charges. This noting charges term is used only in the books of the acceptor because it's his commitment to settle this money. So 50 rupees should be expenses here. For A, he paid, and anyhow that is going to be recoverable from B. It's not expenses for A. Always remember, whenever this is noting charges, this noting charges is confirmed charges only in the hands of the acceptor. Whoever may be the payee, probably if it is held by the writer he himself, then he may be paying the noting charges, recovering later on. If the bill is held by the banker, due to the discounting, noting charges is payable by the banker and recoverable from B later on. If the bill is endorsed to the creditor may pay the noting charges recoverable from the last person, B later on. Is that clear? That's the logic. The entry here remains same. Noting charges ultimately paid by the payee, but charges recoverable from the acceptor, final acceptor. Is that clear? Make a note of it. If it is clear, text me. We'll move on to the next one. Make it faster. Keep texting me. Online students. Clear? Now, sixth subdivision. Discounted bill gets dishonored. Okay. So we are going to deal with this one. We have completed this one also. Now I am moving on to this part. Clear? Discounted bill got dishonored. Then who may pay the noting charges? Banker. Okay, noting charges paid by. Keep till maturity. Drawer, he himself pays this and recovers later on. Discounting the bill, banker may pay and recover it from acceptor later on. Endorsement, the creditor on whose name it is endorsed, he may be the payer of the noting charges. And noting charges being the expenses, in whose hand? In all the three cases, in whose hand it may be the expenses? Acceptor of the bill. Okay, he has accepted, he failed, then it's his responsibility to pay the noting charges. But anyhow, we paid, the payee paid and recovered it from the acceptor later on. Clear? Hope now you'll be able to understand. Now we'll be moving on to the next case. Yeah, come on, join with me. First two entries are same like, 2 to 3 entries are same like. Come on, make it faster. In the books of A, in the books of B. A and B. Goods sent and bill transferred. A discounted with the bank for rupees 940. Okay, this happens on 1/4/2024. Maturity date being 4/7/2024. And banker A has given this bill, gets cash rupees 940. Another 60 rupees may be the discount. On maturity, banker has to approach B when 4/7/2024. But on maturity, the bill got dishonored. B has not honored. So he approached the B with the bills and it gets dishonored. And the banker paid noting charges. So because of that reason, the payee being the banker here, he has to pay the noting charges. He paid another 50. And now as B failed to pay, immediately he approaches A. First responsibility is to pay is in the hands of B. Second responsibility, that's why we call secondary liability. Okay, it may be called as secondary liability in the hands of A. As B failed to pay, then it's a liability of A. He has to settle this money. Now bank says 1,000 rupees original amount. Because of non-payment, I get it noted for this. I paid 50 rupees. Immediately demands A to settle 1,050. A makes a payment of 1,050 to banker. Immediately A recovers that money from B, stating you have to pay me 1,050, not 1,050. So payment is made by the banker. He simply collects this money from A. A simply collects it from B later on. Is that clear? Let's start with the journal entries. Number one, first journal entry. Second journal entry. Third journal entry. First journal entry is all about sales. Second journal entry is for the bill. Third is all about discounting the bill. In case of dishonor, along with the noting charges, how the entry will be there. So that's one extra point you have to learn here. The rest of the three are the usual one. Come on, make it faster. Number one. B account debit to sales. To sales. The value being 1,000. Second entry being bill BR account debit to B account, the value being 1,000. Third one is you are discounting the BR with the banker, you are getting the cash of bank account. How much you are getting? You are getting 940 only. And the difference between the bill value and this one will be called as discount allowed. Discount on bills discounted. 60 to BR. 1,000. All these things are happening on the day one of the transaction, 1/4/24. On 4/7/24, on 4/7/24, okay, 4/7/24, clear. The bill got dishonored. Now it's my responsibility to make the payment to the banker. Automatically, entry is reversed. While reversing, I debit B account. Again, B becomes my debtor. B account debit. I have to be responsible for the banker. Come on, tell me. For how much we have to be responsible? 1,050. Banker says you have to pay me 1,000. Actually, the money recoverable from B, he failed to pay. So you have to pay me the 1,000. Apart from that, that status, dishonor status got noted with the notary public. For that, I spend another 50. So you have to pay me 1,050. So, okay, sir, I will pay 1,050. The next moment, I call B. You have to pay me 1,050. So I debit B 1,050 and credit bank 1,050. Clear? In the books of B, the parallel entries are, rather than sales, it is purchases. So purchases account debit to B account. So to A account. Sorry, I may use some wrong names. Kindly correct me if I am posting it absent-mindedly. Second one being, rather than BR, it becomes BP. A account debit to bills payable. This value being 1,000. Third entry, we don't have corresponding entry. For discounting, endorsing, no entry in the books of the acceptor. He simply says, bring the bill and get the cash, whoever it may be. On maturity, the bill got dishonored. For dishonor, he is going to reverse the bills payable entry. So then the entry being bills payable account debit 1,000 to A account. A account. But while reversing, he has to reverse with how much? 1,050. Bills payable is 1,000. But A states, I paid another 50 rupees for the noting charges. You have to pay me that 50 also. So while reversing BP to A account 1,000. Apart from that, for the 50 rupees also, we have to pass one more entry, noting charges to A account. Noting charges is paid by A, so he simply credits A. So if you ask me, sir, noting charges is originally paid by the banker. No worry, In B's books, bank is having no connection at all. He simply considers whatever the payment done by banker is assumed to be done by A himself. So A account notary charges account debit to A account 50. You can pass two journal entries or single entry. Two journal entries means reversal of this entry. Another one entry is for the noting charges. Okay, noting charges to A account. So you club these two journal entries and make single journal entry like here. Clear? Hope you will be now able to understand this logic. Question number 7. Endorsed which got dishonored. Now currently the pay being C paid the noting charges. The first journal entry is all about for sale. Come on. Pass the journal entry for sale. Okay. 1/4/24 sale happens to be in the books of A. B account debit to sales. Value being 1000. Immediately on the same date, A drew a 3-month bill. So for the bill, the journal entry being BR account debit to B account, value being 1000. On the same date, A endorsed in favor of C. From the balance sheet, we are sure that the amount payable to C being 1000, for that we paid only 1000 rupees worth bills. The difference between these two is my discount received. So, C account debit, the amount payable to C being 1010, but we have given only 1000 rupees worth of BR. The difference between these two 10 rupees is called discount received. Discount received. On maturity date, it got dishonored. The fourth one. This is third one, fourth one. The maturity date being 4/7/24. 3 months later, 3 grace days is added with. Now here, the journal entry being, as it is dishonored, entry is reversed. Now it's B's responsibility to make the payment. Again, B becomes my debtor. And I have to pay back to C, two creditors, or to C. How much I have to pay to C? 1060. 1060, because the discount received is also be reversed. Discount received is also reversed. Clear? The amount recoverable from B being 1050. I called B. As you fail to pay this money, you have to pay additionally another 50,050. And C called me, sir, you have to pay 1060, because originally 1010. We paid only 1000 rupees and enjoyed a discount. But as we failed to pay, that discount receipt should also be reversed now. So the discount received is now reversed by debiting. B account debit, discount received account debit, to C account will be the correct journal entry for discounting, means dishonoring of the journal entry, dishonoring of the bill. Now let's go for the B's book. For sales, we have the purchases account debit to A account, this value being 1000. Next one, BR to B, rather than now it will be A account debit to, rather than BR, it's now BP 1000. While endorsing, we don't have any entry. On dishonor, very simple, reversal of this entry. Apart from that, another 50 rupees should also be payable. So the entry being bills payable account debit 1000, but amount payable to A account being 1050. The additional 50 is for noting charges. Noting charges account debit. Okay. Hope now you'll be able to understand the seventh model. Clear? Make a note of it. Eighth one. So up to now we have completed majority aspects. Dishonoring bill over in case of discounting, endorsing, or keeping it till maturity. All the three over. These three over, these three also over. Bill sent for collection is also over. Now we'll be dealing with the renewal of bill as well as retirement of bill. So with that, first block is completely over. First block is completely over. Okay. So here is all about renewal of bill. Renewal of bill is nothing but extension of the period. Extension of the period is called renewal of the bill. Within 3 months I will pay. That's how the commitment is there. Later on, it may be extended by another 1 or 2 more months. For the additional delay period, they will offer some extra interest. That's all. Always remember, in case of renewal, the original bill got dishonored, a fresh bill will be again drafted. You just go with the same provisions for the subsequent bill also. Rest will be the same. Come on. Pass the journal here. So the first one being this one, sale. Second one is nothing but the drawing of the bill. And eighth, A keeps till maturity and due date accepted a renewed bill. So renewal happens on the maturity. Renewal happens means the original bill got dishonored. A fresh bill is going to be drafted on the date. For that, another 2 months also be extended together with interest 12% per annum. On the due date, the new bill met. So, renewal of the bill involving two aspects. One is dishonor of the original bill. Dishonor of the original bill and drafting a new bill. Draw a new bill. While drawing a new bill, interest is added. And fourth one is nothing but meeting the bill on due date. The second bill is met on due date. 1/4/24 is the original bill's drawn date. Maturity date of that being 4/7/24. Further, a renewal happened for another 2 more months extended. Okay, 3 days and 2 more months. So 7/9/24 is the due date for the renewed bill. For the renewal, of course, they demand some extra interest. Sir, still you are delaying 2 more months. No, whatever the due is there, no, you pay me some extra interest. And the payer also committed to pay extra. No issues. That extra amount could be the bill value being 1000. Applicable rate of interest in this case being 12% per annum. Extended period being only how many months? Extended period. Only 2 more months. So 2/12. Then 20 rupees is added with a bill for extra payment. Extra payment. In case of renewal, usually we don't have the noting charges. Why? Because the creditor means debtors says, no need to go to the court, sir. I will settle in prompt days. No need to worry about that. So I'll pay. That's how he comes and surrenders himself. So we no need to go for the legal actions. It's a mutual cancellation, so we no need to get it noted, so noting charges may not be applicable. Is that clear? Yeah, come on, pass the journal one after one. In the books of A, first transaction, this one, on which date? 1/4/24, sale happened, so B account debit to sales. B account debit to sales. This value being 1000. And second transaction being A drew a 3-month bill. A drew a 3-month bill on the same date. So BR account debit to B account. This bill value being 1000. And he keeps till maturity. On maturity date, this bill got dishonored. Maturity date being this one. So 4/7/24. This is 1, 2, third A entry, first entry. So renewal means dishonor of the original bill as well as drawing a new bill. Both will be included. So this bill is dishonored. So for that, the entry is just reversed. B account debit and to BR account. What about the noting charges, sir? Noting charges will not be applicable here. Noting charges will not be applicable because mutual cancellation. So not only dishonor, reversal of the means bill entry, we are going to draw a new entry here, new bill. So for drawing a new entry, new bill, BR account debit to B account, BR account debit to B account. The amount payable by B being 1000, but the new fresh BR value being 1020. This additional 20 is for the interest. Interest is our revenue, so to interest. Interest is going to be credited here, 20 rupees. So I call over phone and confirm that you have to pay me 1020. I'll write a bill for 1020. You accept and send me. Okay, he says okay. Originally 1000 rupees, the additional 20 rupees is for interest. So BR account debit to B account to interest account. And fourth entry, on maturity date of the second bill, 7/9/24, the fourth entry is passed, which is nothing but meeting it promptly. So we get the collections for this BR, bank account debit to BR. It got honored properly. This value being 1020. 1020. Clear? Now, in the books of B, what happened, sir? First entry being the same, rather than sales, it's a purchases. So purchases account debit to A account, 1000. BR to B account is nothing but A account debit to bills payable in his angle, 1000. On maturity, the bill got dishonored. So the entry is just reversed, bills payable account debit to A account, this value being 1000. And now he accepts for the new bill. For that, the journal entry being A account debit, the amount payable to A being 1000, but I accepted for 1020 bills. The difference between these two is my commitment to pay extra for the delay payment named as interest. For A, interest is the revenue, for B, interest is the expenses. And on 7/9/24, bank to BR is reversed. Bank to BR is reversed. Means settlement. Okay. Bills payable is taken and we settle the money by bank. The value being 1020. Is that clear? Hope now you'll be able to understand renewal. So renewal means it involves two items. One is dishonor, next one is fresh bill. While drawing a new bill, usually you'll add some extra interest also. Is that okay? It's based on the mutual understanding. Clear? Come on, make note of it. Next, shall I move to the next one? Question number 9th subdivision. A keeps it till maturity and on the due date B accepted a renewed bill for 2 more months together with interest 12% per annum. So again extension renewal for the sale first transaction, for drawing the 3-month bill second transaction. Renewal happens. During the renewal you have to pass 2 entries. One is all about what? Dishonoring entry. Another one is all about new draft, new bill drawn. On the due date, B became insolvent and only 60 paise per rupee was realized from him. So as he became insolvent, we cannot realize any amount for the second bill also. So second bill also be dishonored. Dishonor of second bill. And later on, whatever the amount we have to recover, we recovered only part amount, 60 paise in a rupee. So collection along with some bad debt. Along with some bad debt. Hope so you will be able to understand in case of insolvency. In case of insolvency. Now come on, pass journal entry for all. 6 journal entries you have to pass in the books of A. Parallel entry also be available in the books of B. Yes. In the books of A. In the books of A. On first date 1/4/24. 1/4/24. Pass the journal entry for the first one. It's a sales only, right? So B account debit. B account debit to sales. Value being 1000. Value being 1000. First entry. Second entry is all about A drew a 3-month bill. A drew a 3-month bill. So then entry for drawing the bill, BR account debit to B account. The value being 1000. Third entry, the bill is renewed on maturity. So 1/4/24 is the first bill date. Maturity date of the first bill being 4/7/24. And maturity date for the second bill being for the another 2 more months. So 7/9/24. We have completed this date. So we now go for this date 4/7/24. On this date, pass the entry for dishonor. Dishonor of the bill. Just reverse it without noting charges. B account debit. B account debit to BR account. Value being 1000. And on the same date, we issue fresh BR. So BR account debit. Okay, BR account debit to B account. Actually 1000 rupees. For the renewal bill, we add interest also at the rate of 12%. The amount payable being 1000 rupees. As he requests a further extension of the extension period, we need to add interest at the rate of 12% for the extended period. The extended period being only 2 months. So 2/12. This being 20 rupees. This being 20 rupees. So now the fresh BR we have written worth rupees 1020. Out of that, the original due from B being 1000, another 20 additional due is nothing but interest income for us. And on maturity of the second bill 7/9/24, this second bill also got dishonored. Fifth transaction. For the dishonor, the journal entry being very simple, a reversal of the BR entry. So B again becomes my debtor, B account debit to BR. This value being 1020. Now finally we collect the money for this final due, but not fully, as it becomes insolvent. Only 60 paise in rupees collected. So bank account debit. Bank account debit. The amount not collected is called as bad debt account debit to B account. To B account. 1020. How much we collect? Only 60%. 612 we collected. To the extent what we have not collected is called a bad debt, which is 408. Which is 408. Clear? So you can now pass a parallel entries in the books of B. Okay, in the books of B, on the first date, rather than sales, we have the purchases. Purchases account debit to A account. This value being 1000. Second, BR to B account can be rephrased like this: A account debit to bills payable. A account debit to bills payable. This value being 1000. A account debit to bills payable. 4724. As the original bill got dishonored, so we have to again reverse this. So bills payable account debit to A account, the value being 1000. Now he access for the new bill, A account debit to P account. The actual amount payable to A being 1000, but the fresh bill being 1020. The additional 20 is nothing but my extra loss by way of interest for delayed payment. So debited here, interest account debit. And fifth transaction is all about the second one also got dishonored. As second bill also got dishonored, so bills payable account debit 1020 reversed. While reversing, I had to pay amount to A account being 1020 along with the interest. Okay, you don't reverse this. Interest is already included. So now you have to pay 1020 to A account. Finally, he makes the payment only 60 paise in the rupee for whatever the due may be to A. So A account debit, the amount payable to A being 1020, but we are sure to pay only 60% of this amount, which is 612. Another 408 we could not pay. That amount could not be payable is called deficiency account. Deficiency account. Is that clear? Hope now you'll be able to understand the question number 1. Subdivision number 9. Make it faster. If it is clear, text me. We'll go for the last one. Rebate. Paying ahead. Okay, cancelling the bill. We'll see that the last aspect. Come on, come on. Clear? Clear? Okay. Now we'll move on to the last one. Online students, come and text me. Yeah. Now let's move on to the question number 1. Subdivision 10. Here what happens, B pays for the bill in 2 months. Actually, bill has maturity period being 3 months. But the payer comes to us by the end of second month itself. Sir, I will finish up paying today itself. And we are happy, no. If we are able to receive the money much ahead rather than 3 months, I am getting by second month itself. The payer demands, sir, I am paying you in ahead, right? So 2 months earlier, give me some discount. So now you will be able to give them some discount as we are getting the money ahead. That discount is usually called as a rebate. That discount is usually called as rebate. Okay, so the rebate allowed being 12% per annum. So first entry being the sales entry, second entry is nothing but drawing of bill entry, third entry is settlement much ahead. While settling much ahead, the original bill got dishonored. Original bill got dishonored. Is that okay? That's how you can assume. And balance amount is collected like. That's all. Let's see. Rather than stating this being dishonored, just assume this being the discounted with the banker, like you can finish off. Very simple concept. Very simple concept. Yeah. In the books of A, 1424, sales happens. The entry being B account debit to sales. Value being 1000. On the same date, BR is drawn. BR account debit to B account. this value being 1000, but the maturity date being 1/4/24, the maturity date being 3 months, right? So 4/7/24 is the maturity date. But B pays for the bill in 2 months. 2 months means this date itself, 4/6/2024 itself, he comes and settles this money. So he pays 1 month ahead and demands some discount for the 1 month early payment. 1000 rupees. What about the interest for the 1 month? Usually 12% rate of interest charged for a year. As he makes the payment 1 month ahead, you have to find out 1 month's interest here. The 1 month interest being 10 rupees. So we say, okay, as you are paying 1 month ahead, so we will discount 10 rupees. That discount is called rebate. For A, it's an expenses like. So here, bank account debit, how much he gets? 990 only. For what? For the bills receivable. The bills receivable worth rupees 1000, but we get only 990. The difference between these two is nothing but my expenses for early settlement, named as rebate on bills discounted. Rebate on bills discounted. Is that clear? Parallel journal entry in the books of B. Parallel journal entry in the books of B. Rather than sales, it's purchases now. Purchases account debit to A account, the value being 1000. BR to B account is now replaced with A account debit to bills payable. Now he settles the bills payable much ahead, so he gets 10 rupees benefit. Original BP value being 1000, but the payment done is only 990 bank. The difference between these two is the gain, rebate on bills. Hope now you'll be able to understand this one. I have covered all the aspects. See, as I already told you, what are the things are possible here? Keep till maturity and honoring, discounting bill and honoring, endorsement of the bill and honoring, and dishonoring. Okay, both the varieties we have studied. 6 illustration. Renewal of bill also we have studied. 7. Bill sent for collection also we studied. 8. Retirement of the bill and dissolve means insolvency also happening. So these are the scenario also we studied. So 9 and 10. So almost 10 different models we have covered here. Honoring situation as well as dishonoring situation. While dishonoring, we have the noting case also. Okay, once noting happened, the bill value becomes what? Higher, which includes the noting charges also. So bill value may be 1000 along with the noting charges. Hereafter, the amount payable by the payer being 1050. Okay, that we have studied. So we have completed all these illustrations. We leave with only one concept to be discussed. Before we go for the accommodation bill, we'll see few extra illustration how we can expect the questions in your exams, covering these 6 or 9 models, right? Thereafter, we'll go for the accommodation bill. So after a break, we'll meet. Okay. Endorsed renewal of bill with interest. Mr. A draws on Mr. B a bill of exchange for 5000 on 1st January 2024. So drawing of the bill. A endorses the bill in favor of C before maturity. Mr. B approaches Mr. A with a request that the bill be renewed for further period of 3 months. So it's a renewal. While renewing, 15% interest is also applicable for the delayed settlement. Mr. A pays the sum. So renewal means automatically 2 things will happen. One is existing bill dishonor. Next one being fresh bill will be made ready. For the fresh bill, you have to add the interest also. On due date, and agrees to the proposal of Mr. B. That's all. Pass journal entries in the books of Mr. A. So you have to pass entry only in the books of A, assuming that the second bill is duly met. So if you are asked to pass entry only in the books of A, you can pass only in that book. You don't need to worry about the other party. So A's book. A's book. Right. On 1st January 24, 1st January 24, bill drawn. Okay, then we get the BR. So BR account debit and accepted by B. The value being 5,000. Okay. On maturity, Mr. A with a request to cancel renewal. Renewal means it's going to be dishonored. But beforehand, it is going to be endorsed to C. For endorsing, C account debit to BR account. Value being 5,000. On maturity, the bill is renewed. Renewal means two things happening. One is dishonor of the original bill and writing the new bill. While writing the new bill, you have to include the interest also. So dishonor of the bill, BR account debit to C, value being 5,000. BR account debit to C, 5,000. Apart from that, what we have to do? We have to, sorry. While dishonor, BR account debit, okay. The entry is just reversed. We have to create a new bill. While cancelling the BR to, no, I made a mistake. Okay, sorry. B account debit to C account, sorry. Okay, B account. Again, B becomes my debtor. B becomes my debtor. Clear? How many of you posted this entry correctly? These two entries are okay. What about this one? How many of you completed this one properly? Okay, you're done. Okay, good. B account debit to C. Now we are going to write a fresh entry, fresh bill, BR account debit to B. The value being 5,000, but we need to include interest also, to interest. How much is that? As a renewal bill has further 3 months period and applicable interest rate being 15% per year. So 15% into 3 by 12. Now what's the final value? Come on, tell me. 187.5. 5,187.5. On the mature date, this bill is properly met, the entry being bank account debit to BR. Duly met on the maturity, 5,187.5. How many of you got this answer correctly? How many of you? Come on, raise your hands. Finished or not? Where did you make the mistake? Babai sold goods to Kachari. Okay. Sale for rupees 90,000 on 1st April 24, for which the later accepted 3-month bill of 30,000 each, due respectively in 1, 2, 3 month respectively. So now bill, 3 bills, each bill being 30,000 each. This is 1 month bill, this is 2 month bill, this is 3 month bill. So for the sales worth rupees 90,000 rupees, he gets a due in 3 installments, 30,000 each. The first bill is retained by Babai and is duly met. This is kept by the drawer and met duly. Second bill was discounted and discount being 600. So 29,400 plus 600. Okay, discounted. The third bill also discounted, discount being 900. For this, 2,900 is received, 900 rupees being the discount value. Okay. And the third bill discounted and is dishonored on the mature date. So this one is dishonored and noting charges is paid for this. Noting charges being 150 rupees. New arrangements were duly made whereby Kachari pays cash 10,150. For this dishonored bill, new arrangement is made. New arrangement is made. Okay. For that, Kachari pays 10,150 cash. 10,150 is immediately paid. Probably a share for the due and 150 rupees for noting charges may be paid. And accepts a new bill due in 2 months for the balance amount with interest 15%. And new bill for the balance. New bill for the balance with 15% interest, 2 months, 15% rate of interest. Okay. The renewal bill has maturity being 2 months. The bill is retained. This bill is not discounted or endorsed, retained. On due date, the same is dishonored. And this new bill is also dishonored. Also dishonored. And now the noting charges being 180. Kachari declared insolvent. Thereafter, he became insolvent on 15th September 24. 35 paise in a rupee were received from his estate. Pass journal entry in the books of Babai. You have to pass the entry only in the books of Babai. Okay. So I have just noted down all the required things. This is more than enough for solving the illustration. Okay, no problem. Now let's proceed this. Right. Now, first transaction being 1/2/14/24. Sales. K account debit in the books of Babai, B's book. K's account debit to sales. Am I right? The balance, the value being 90,000. Second being bill drawn for the amount on the same date. So BR account debit to K account. This value being 90,000. This is the entry for all the three bills put together. All the three bills put together. Right. All the three bills put together. Immediately, first bill is retained. Second bill and third bill are discounted. I can now combine these two bill for discounting. Bill number 2 and 3. Okay. Discounting 2 and 3. One bill is retained with him. No need to worry about this. For this, the entry being bank account debit to BR account. The value of the bill number 2 and 3 being 30,000 each, 60,000. While discounting this bill, banker paid after a discount. The discount being my expenses debited here. The discount being 600 plus 900, 1,500. 58,500 being bank. 58,500 being the bank. Bank account debit, discount account debit to BR. Okay, bill number 2 and 3. Now we'll go for the maturity. 1/4/24. Bill number 1 has maturity value, maturity date being, you have to add one more month and 3 days. So 4/5/24. Second bill maturity value date being 2 more months. So you have to add 2 months instead of 1 month. So 4/6/24. Third bill maturity date being 4/7/24. This fourth bill got dishonored and extended further another 2 more months. Then automatically 7/9/24 is the revised bill's maturity date. Now we'll go for this one, 4/5/24. 4/5/24. The bill retained by him is going to be encashed, surrendered and cashed. This one is over. Bank account debit, BR account. Bank account debit to BR account. This value being 30,000. Bank account debit to BR account. Second bill on due date, it is met properly. 4/6/24. What is the entry? Second bill was discounted. Now on maturity date, it is met promptly. What is journal entry? No entry. We don't have no entry here. We don't have any entry here. Why? Discounted bill where the banker surrendered and encashed. Until that period, it remains as a contingent liability below the balance sheet. Now it cancels. So we never bother about the passing the journal entry in this case. And now 4724. 4724 for the third bill. Now, with respect to the third bill, we came to know it is dishonored. So dishonored, and we paid the noting, the payer. Payer as a payee might have paid the noting charges. Banker has paid the noting charges. We recovered the noting charges from whom? From the party, our debtor, Kachari. So again, debit Kachari account, debit account, Kachari account debit. The value being bill value plus noting charges, both put together. 30 plus 150, 30,150. To reversal of BR, 30,000. Rather than BR, we had to credit bank account. So we had to credit bank account, 30,150. Clear? K account debit to bank account. K account debit to bank account. So I asked the banker, no need to worry about, sir, you can deduct from my account. So banker deducted 30,150 from my account. I intimated to Kachari to settle this as soon as possible. He also says, okay, 30,150, I'll pay you later. That will be my debtor. And for this, we have two more processes. After the dishonor, we collected a portion money, and for the balance, we raised a new bill. 30,150. Out of that, 10,150 we received by way of cash. Balance being 20,000. He demands this 20,000 will be payable 2 months later. For the 2 months, I will now add interest. 20,000 and applicable interest rate being 15%. For how many months? 2 months. Come on, get me the value. 500. So I collect additionally another 500 rupees. Now for this, the journal entry for collection as well as writing the new bill. For the collection, the journal entry being bank account debit to K 10,150 over. For the new bill, BR account debit to K to interest. Right. So let's see here. I can write separate entries so that you will be able to understand. A portion is settled. The entry being bank account debit to K account 10,150 is paid. 10,150 is paid. And for the another portion, I draft a new bill and he accepts this, which is 20,500 to K account 20,000. The excess amount will be named as interest 500. Is that clear? So the entry for this as well as the entry for this. You can combine these two entry also, no problem. You can combine and post this as a single entry, bank account debit, BR account debit to K account to interest. That's how you can combine these two entries also, no problem. Next, this bill is retained by him on maturity date. This bill also dishonored and noting charge paid being 180. As the bill dishonored on maturity, again I am debiting K account. So K is my debtor. Whenever he gives something, his name is credited. When the given item becomes invalid, then again we are debiting him. So I am debiting him. So K account debit. How much? 20,500 to what? BR account. BR account being 20,500. So I called him, sir, your bill not in cash, so you have to pay me 20,500. So you are my debtor to the extent of 20,500. Okay. Apart from that, the status of BR getting cancelled, dishonored. No, I got certified from the notary public. For that, I have paid 180. So now you have to pay me that 180 also. So K account debit to noting charges. Bank. This value being 180. The overall collection being 20,680. K account debit to BR to bank. Is that clear? So after this, on 15/9/24, this happens on which date? 7/9/24. After the cancellation of this dishonor of this bill on 15/9, 24, we got the collections 35 paisa in a rupee. So from K I have to get 20,680, but we get only 35 paisa in a rupee. So the entry being bank account debit. To the extent we don't get no named as bad debt to K account. Hereafter K is no more my debtor. I cannot maintain any account balance for him. So as it becomes insolvent, I could not recover anything. To the extent of amount required, means recovered from him is going to be debited to the bank account. Come on, tell me, 35% on this. 7,238. What about the next one? 13,442. Okay, clear. So this is what about the exam related illustrations. Earlier we saw the concepts. What happens in case of holding and dishonoring, discounting and dishonoring, and endorsing and dishonoring or honoring. In those cases, renewal and all we discussed. But in practical exams, right? So in the exam questions, some maybe the way how we solve this illustration may be applicable. You no need to pass the entry for both the books. Sometimes you may be asked to pass the entry only in the books of dryer, and sometimes only in the books of dry. Okay. Sometimes it may be in the books of NDRC also. We'll see the next illustration. Come on, make a note of it. If you have any doubt, you can ask me. Big woes fast, 12,000. Fast, big. B has to make a payment of rupees 12,000. Okay, due. Big woes fast rupees 12,000, for which the farmer accepts 3-month bill drawn by later. If two names are given, between these two, first name is called farmer name and second will be later name. The farmer, he accepts. Naturally, no. First will draw the bill drawn, and acceptance received. Acceptance received. First immediately discounts the bill with this banker. He has given it to the bank. Strong bank at the rate of 12% per annum. The bill is for 3 months. 12,000. At the time of discounting, the bank charges interest rate of 12%. The duration or term of the bill being 3 months, so you have to calculate the interest for the 3 months. 360. So bill is given to the banker. Collection is made 11,640 after a discount of 360. On the due date, the bill is dishonored and Strong Bay pays 40 as noting charges. On the due date, bank approaches B and he failed to pay. Immediately, second, he comes to fast. By the time banker made a payment for noting charges, value being 40. Thereafter, a renewal happens. Big pays 2,360, including interest 400 of rupees 400, gives another bill at the 3 months for the balance. Actual bill value being 12,000, together with the noting charges being 12,040, and as he extends the further payment, he adds another 400 rupees. 12,440 will be the final value. 12,440 will be the final value. Is that clear? And immediately 2,360 is paid by way of cash. So F says to B, as your bill dishonored, 12,000 rupees you have to pay, and noting charges 40 rupees should also be payable. And B demands some extended period. Okay, for the extended period, you have to pay me 400 rupees extra for the interest. Okay, he says, okay, I will pay 400 rupees also. Together with 12,440, B has to pay to F, and he says, I will settle 2,360 immediately. 2,360 immediately. And for the balance 3-month new bill drawn, this is settlement, and new BR is drawn for the balance sum. What is the value? 12,080, am I right? 10,080. New bill value being 10,080. And next, Fast endorses the bill to his creditor Thin in full settlement of his debt 10,200. Now this is given to whom? One of the creditors C, endorsing. The amount payable to the endorsee being 10,200 for the full settlement. So 10,080 is paid, or BR is issued for 10,200 rupees due. It means 120 being the discount. Okay, 120 being the discount. And Thin, this being Thin, right? This is Thin. Okay, Thin. And Thin discounts the bill with the banker, Strong Bank, who charges 80 as discount. He again approaches, the Thin approaches banker and gets a portion of money. Out of 10,200, he gets 10,120, 80 rupees being discount. Right. Before maturity, Big becomes bankrupt, and first and final dividend of 20 paise in a rupee is realized from his estate. Later on, banker should approach B where he fails to pay, because he becomes insolvent, and final amount recoverable from B being only 20 paise in rupee. 20 paise in a rupee. Show the journal entries in the books of Thin, Strong Bank, and ledger account of Big in the books of Fast. Okay. So what are the things you have to do? Ledger account of the Fast. Okay. Ledger account in Fast book, Big account will be open. What are the requirements are there? Journal entries for Thin and Strong Bank. Thin and Strong Bank. Apart from that, ledger book in the books of Fast, and you have to open the Big account. Big account. One of the comprehensive illustrations. See how the question is said. Now you will be able to understand the challenging question, how it may be expected in your exams. It's one of the challenging illustration. Right. Now I'll start with one after one. In the books of Fast, you have to open Big account. In the books of Fast book. You have to open Big account. Okay. Apart from that, you have to pass a journal entry in the books of T as well as bank. Thin account as well as bank account. Definitely this illustration takes 1 or 2 hours for you to solve. Okay. This is how you can expect a comprehensive illustrations in your exams. Really tests your patience as well as your creativity as well as thought process and all. So, journal entry, T book, journal entry, and bank account, bank book. There you have to again pass the journal entry. Yes, come on. Pass the entry one after one. First, already there is a due of rupees 12,000 recoverable from big. Recoverable from big. So big being the debtor in the books of fast. So the opening balance should be in the debit side. To balance brought down. How much is that? 12,000 rupees. Is that okay? If the transaction gives a rise to the big, should be debited. If the transaction gives a decreasing value for the big, it will be credited. Very simple. Now bill accepted. So now the entry being BR account debit to big account, it reduces the big's balance 12,000. Okay. Then the bill is discounted with the banker. Okay. After this, what happens? We need to open the BR account. We need to open BR account to big account. BR account debit to big, value being 12,000. In the question, they have not asked this BR account. Anyhow, I just open for the better understanding. This bill is discounted with the banker. So you get the bank collections by surrendering the BR by bank. Out of 12,000 rupees, how much you are getting? 11,640. Balance 360. Consider as discount on bills discounted. And how this will appear in the bank account? Okay. Now bank purchases the BR for this payment. BR account debit. The amount received. The value received being 12,000. But the amount paid being to bank. How much the payment is made? 11,640. The difference between these two is nothing but discount on bills purchased. So bills purchasing. That's how it is termed here. This value being 360. This is nothing but bank account of F. F bank account, or simply name this as being F account. Okay. F's bank account. On maturity, what happens? This bill got dishonored and noting charges is paid. BR is closed. BR is closed. You are not asked to prepare the BR account here. Not asked to prepare. This will be usually closed. Now, if the bill dishonored, what is journal entry again? Again, I am debiting the party's name. And crediting to the party to whom I have to pay. So, I have to pay how much? The bill value is 12,000 rupees and 40 rupees noting charges paid by banker. Together with I had to make the payment of 12,040. 12,040. Is that okay? So, journal entry for the dishonor being debit what? Party big account. Credit what? Bank account. So, I am responsible for the banker. So, big balance will be increasing bank. The value being 12,040 together with the noting charges. Okay. Actually, in the case of bank account, I don't pass the journal entry. Okay, I don't pass the journal entry. For the foundation, you can skip this one. For inter, of course, you try to understand this along with the solution I have given here in the text. Right. So 12,000 was the original balance. For that, I received BR cancel. Later, we came to know that BR is not honored properly. Again, the balance arises bank account 12,040. Now, he delays the extra payment for further 2 or 3 more months. I demand extra payment. That extra payment is 400 rupees. That 400 increases the big's due. So, for the interest, another 400 rupees. Another 400 rupees. Now, 12,440 is the overall amount we have to recover from big as per this particular transaction. He says that out of this amount, I'll settle 2,360. So, here by bank. How much is he paid immediately? 2,360. For the another balance 10,080, for that what we do? We collect further. 10,080. Another new BR. This BR value is transferred here. BR. Big. The value being 10,080. Clear? So this one is over. Now BR endorses that to whom? T. So he endorses this to T. Automatically what happens here? T account. How much is the amount payable to T? 10,200. For the 10,200, we offered only 10,080 rupees worth of bigs BR. The difference 120 will be considered as discount. Now we have to pass the journal entry in the books of T. Now T gets the what? Bills from whom? Fast. So the journal entry here being BR account debit for T, big being one of the debtor. So now he says I am going to collect the money from big fast. For collecting the money from fast, he gets only the BR. So BR account debit to fast account. The actual amount recoverable from fast being 10,200, but we got bill worth rupees 10,080. The difference between these two 120 will be called a discount. Okay, this is discount. Immediately after that, T discounts this bill with the banker. Okay. So for this, the journal entry being only in the books of T, discounting bill will be passed. Discounting of the bill. The entry being bank account debit and to BR account. The BR account being 10,200. The amount collected here being only 10,120. Because of the discounting, 80 rupees we are getting less, named as discounting of bills discounted. So parallelly for this, the journal entry in this book. Parallelly for this, the journal entry being BR. But anyhow, already told you, no need to worry about the journal entry in the books of bank. Inter students go and refer the Singar Academy text answer for this. Okay. Hope now you'll be able to understand. On maturity date, what happened now? This bill also dishonored. This bill got dishonored. Immediately T says, sir, your bill not matured properly. So you have to pay. So now what happens? The bill is in the hands of banker. It is discounted by T. Actually, it is endorsed by F. Original acceptor B. So he gave the bill to him. He endorses. He discounts and he approaches the banker and he fails to pay. Okay, bank approaches the party big and who failed to pay this. Automatically, what happens? Banker again comes to T. T comes to F for demanding. F again makes the money recoverable from B. Is that okay? It's a reverse calculation. In the books of T, dishonor entry will be there. So while passing the discounted bill dishonor, now he is responsible to make the payment to the banker. So banker is now creditor. And immediately T says, calling the fast and you become my debtor. You have to pay this money. You gave me the bill, that bill becomes invalid. So you have to pay me. So F account debit and to bank. How much money payable to the banker? 12,000 rupees originally. Okay. And for fast, okay, 10,200 rupees. This will be, value being, how much is the amount recoverable from the bank? 10,200. How much money I now recover from the other party fast? 10,200. It's now matching. Automatically, it becomes a part of fast book in big. Okay, he says, okay, I will pay you, sir. Writes here T account and 10,200. Writes here 10,200. Remember, original value was settled. This is the first one. And the bill dishonored, then the amount rises to 12,440, also settled this way. Later on, this is also dishonored. One more bill is now raised here as 10,200. For this 10,200, later on, fast gets the money. How much it gets? Only 20 paise in a rupee. So bank account. 20 paise in a rupee means in the case of 10,200, the value being 2,040 gets. To the extent amount not collected is called bad debt. How much is not receiving? 8,160 not received. So 3 blocks is there. So first original due, and for that settlement is by way of BR. Next, the BR got dishonored, and together with the interest, now it becomes 12,440. We collected a portion interest and a portion BR. This BR also later on endorsed and dishonored. For that, we have to recover again 10,200 from Big. Out of the 10,200, Big becomes insolvent finally. He pays only 20%, which is 2,040. Balance becomes bad. This BR account not required. Of course, bank account, I told you, no need to worry about that for the current B. Okay, because you will be studying that in detail along with the company corporate accounts at your group 2 level in CMA, not here. So this is one of the comprehensive illustration. You have to think a lot to solve this illustration. Clear? The overall value being, come on, total the big account. 34,640. Make a note of it. So while reversal, again I start with 10,080 only to be recoverable. That's how I have posted here 10,080, and this will also having the impact as per that provision here. You can make a change because originally the bill being 10,080 only, no, 10,080. Make a small correction here. 10,080 and 20% being recovered 2016. 8,064 not recovered. You can make the changes here, and simultaneously the entry here being fast 10,200, bank 10,200. I hope this may be correct. Okay, there is no any doubt here, I think. Yeah, discount availed and everything is reversed. That may be automatic. Is that okay? You make slight change here only. Here, the bill value is how much? 10,080 only, no? The new bill, okay. Here it should be 10,080. I missed this calculation. I make the correction here. Just stand corrected here. The original bill value in this case being 10,080. By discounting 80 is subtracted, only 10,000 is recovered. Okay, 10,000 is recovered. Then this entry also be slightly modified. I thought the bill is 10,200. No, the original bill is 10,080. 10,080 rupees bill discounted with the banker for 10,000. Okay. So then this value will be slightly different. Okay. I just make a small corrections. The bill's receivable value being 10,080. 80 rupees discount. 10,000 is the amount collected. On dishonoring, you have to reverse this entry. While reversal, again fast becomes debit here. How much? 10,200. How much I have to make the payment to the banker? Original value, not the discounted value. 10,080 I have to pay to the government. And the difference between these two is nothing but reversal of discount. To discount. This value being 120. I missed to consider this value. I now restate it with that same value. Come on, make a note of it. So, with respect to the bill of exchange, almost we have completed all the models, some advanced illustrations also. Finally, we'll go for the accommodation bill. So, until now, we have seen that A sells the goods to B for rupees 1,000. For that, A draws bill and gets the acceptance from B. That's how we studied the illustrations. Then it is called trade bill. This is called trade bill. But now A approaches Or B approaches A for what? For a loan. Sir, I am in need of 1,000 rupees emergency, sir. A says, I don't have cash. I too have no cash. Then I will do one different thing. You can draw a bill on me, dummy. Draw a bill, and I accept this bill and send this bill to you. This bill you can discount with the banker and get the cash. Finally, on maturity date, pay the money. I'll settle this money directly to the banker. Otherwise, you directly go and settle the money yourself on behalf of me. You want 1,000 rupees to be payable 3 months? No. No need to worry about that. I don't have the cash, but I want to help you. Draw a bill and I accept and send it to you. You just discount the bill and encash it. 3 months later, you settle this money. 1,000 rupees means, and discounting with the banker, he gets around 950 rupees. 50 rupees maybe the discount. On the nth period, maturity period, B, he himself goes and settles the 1,000 rupees fully. This is called accommodation, accommodating fund requirement. That's why it is called accommodation bill. So assume that A approaches B approaches A for a loan of rupees 1,000. Immediately A also says, don't worry, sir, I too need around 2,000 rupees. You give me loan. A asks him to give me a loan of 2,000 rupees. Very good. A is also in need of money. B is also in need of money. B approaches A for a loan and A says, okay, you can give me a loan. How it is then possible? A says, you draw a bill and I accept the bill. You discount the bill with the banker. You will get a portion, no? Out of that, you settle probably a bill may be drawn for 3,000 rupees. You discount with the banker. 3,000 rupees, around 30 rupees discount has gone, so 2,970. You keep your share 990 after the discount. I may keep another balance 1,980 for my share. So my fund requirement is also fulfilled. Your fund requirement is also fulfilled. On maturity, my share I will pay, your share you pay, so that it will be closed. First scenario is the accommodation bill. Second scenario is also accommodation bill, but second case is mutual accommodation. I am also in need of fund. You are also in need of fund. So we'll write a bogus bill, like it's not one trade bill, accommodation bill. We write and make it accepted by the other party and discounted with the banker. Money is collected after the discount is shared by them for the temporary fund arrangement. It's called mutual accommodation. Illustration is very simple. Let's see. Question number 5. A needs 1,000. Hence, A draws 3-month bill for rupees 1,000 on B and gets acceptance from B. A draws a bill for 3 months on B and get acceptance from him. A discounts the bill with the banker and banker charges 12% per annum. So 12% per annum means 1,000 into 12% rate of interest for how many months? 3 months. 30 rupees discount will go off. 970 is paid by A. Okay. On maturity, A remits the payment to B. On maturity, A remits 1,000 to B and B remits that for the encashing, means the settlement of the bill, honoring the bill, right? That's all. The entry being pretty simple. Clear. So, in the books of A as well as in the books of B, there is no any sales or no due. Only for the fund requirement, the entry is passed. So, first this one. A draws a bill on B. So, BR account debit to bank. Sorry, to B. The value being 1,000. Second, this bill is discounted with the banker. So, bank account debit to BR account. BR value being 1,000, but he gets 970 immediately, 30 rupees being the discount. Right. On maturity, A remits the balance to B, asking him to settle this money. So B account debit to bank. It's nothing but only borrowings. It's nothing but only borrowings. Full amount, full amount. See here, BR debit credit got eliminated and bank debit credit got eliminated. Um, ultimately, he gets the money for a cost of rupees 30. For a cost of rupees 30. That's all. Clear? In the books of B, what happens? For acceptance, the entry being A account debit to bills payable, the value being 1000. 1000. For the second one, no entry. Okay, on discounting, no entry. At the time of honoring, B has to get the money from A because it's not trade bill. Trade bill means already he could have purchased something, for that he has to pay. But here such a initial due is not there. So he gets the money, bank account debit to B account, A account to A account, the value being 1000. With this amount, he simply honors the bills payable account debit to bank, the value being 1000. What happens here? A debit credit cancel, bills payable debit credit cancel, bank debit credit cancel. Nothing happens for B. So because of this transaction, B is now helping A. A makes the fund arranged today at a cost of rupees just 30. So B helped, that's all. Only because of the help he has 3 journal entries. Of course, ultimately all the 3 entries will get cancelled. Clear? This is called accommodation bill. This is called accommodation bill. Come on, text me. Make it faster. Question number 6. Now, question number 6. Mutual accommodation. A needs 1000 and B needs 1000. Okay. B needs 2000. I can make it 2000 rupees. Okay. Yeah. A needs 1000 and B needs 2000. Hence, A draws a 3-month bill for rupees 3000. A is also in need of money. B is also in need of money. A draws 3-month bill for 3000 on B and gets acceptances. So, bill drawn and acceptance for 3000 rupees. And gets acceptance from B. A discounts the bill with the banker. Okay. And bank charges interest at the rate of 12% per annum. So for 3000, 12% for 3 months. 90 rupees. Subtract the 90, 2009-10 will be the final value. Two-thirds of the amount remitted after discount to B by A. Immediately, A remits two-thirds, 3000 rupees, two-thirds being 2000, discount 90, two-thirds will be charged 60, balance amount being 2009-10 into two-thirds, 1140. Am I right? 1940. Clear? Is that clear? Come on. Hey, use the calculators. I'm waiting for you. 2009-10 into 2 bar 3. Yeah. No one is responding. Huh? Come on, come on. Text me. 1940. Otherwise, I will correct ultimately. Should not be. Always cross verify with me. Okay. And on maturity, A remits a balance payment to B. On maturity, A makes a balance payment 1000. This is on maturity. Full amount without any discount. Because for this, A enjoyed the money, so discount should be charged only in A's account. Then bank approaches B and gets the money settled. Bank approaches B on maturity and gets the money. Pass the journal entry one after one. Mutual accommodation. Mutual accommodation. Very first one is all about drawing the bill in the books of A as well as in the books of B. BR account debit to B account. The value being 3000. And this bill got discounted with the banker, so bank account debit. Discount account debit to BR account 3000, 2009-10 and 60, 90. Out of that, first payment released two-thirds along with the interest to B account debit, shared 2000 rupees while making the payment. Discount is also charged. Discount for that share being 60, balance payment being to bank 1940. Now on maturity, another balance also paid, which is 1000 rupees. B account debit to bank. 1000 rupees payment is over. Honoring the BR, we don't have any entry in the books of A. Parallelly in the books of B, A account debit to bills payable 3000. No entry for discounting. Any remittances by A to B will be the income for B, receipts for A, B, so he has to record. He gets two-thirds bank account debit, discount account debit to A account 2000. We collected 1940, another 60 being discount. The next one being A account debit to bank account. Sorry, bank account debit to A. Another 1000 also received on maturity. Bank account debit to A account 1000. Now this bills payable is settled. Bills payable account debit to bank account. How much is that? 3000. Cross check. Bills payable debit credit got eliminated. A debit credit also be eliminated. And now we enjoy the money ahead by paying a 60 rupees cost, because B enjoys two-thirds of the collection. Because of that, 2/3 will be charged in B's account, and A enjoys 1/3. So 30 rupees will be his charge. 90 minus 60, 30 will be A's charge. Is that clear? So this is called mutual accommodation. Both parties' fund requirement is satisfied here. So with that, mutual accommodation concept is also over. I request you to solve the question number 7 yourself. Take your own time, try to get the answer, try to understand all the concepts much ahead, then you try to solve the question number 7 yourself.